It's really, you know what the craziest part of it is to me, Dunnigan, is that if you would have told me that, gold was at 3,000 bucks, let me look at the futures here real quick. And silver over 34. Let me just see what the futures are here real quick. Of course, my computer never cooperates when I'm asking it to. So the futures on silver are up to 34.63, and the futures on gold are at 3,039. If you would have told me that that'd be the case and there's virtually no mainstream media attention, I would have said there's just no way that that can be the case. I mean, my entire career, gold at 3,000, people would have said you're crazy. I remember when Jim Sinclair said gold would hit 1650, and he was called, he was looked at as being, crazy. There's no way gold could be 1650. This is when it was 400 and 500. So to see it at over 3,000, to close it over 3,000, to breach that level, and really not to see any acknowledgement of it is really shocking, especially with what's going on in London and New York.
Tonight, we turn our attention to a critical development that could impact investors across the world. A seismic shift may be brewing in the silver market, and the month of April could prove to be the tipping point. Andy Schectman, CEO of Miles Ear, Franklin Precious Metals, joins the conversation with a stark warning. Small silver investors may be walking into the most dangerous market environment in decades. He believes a major repricing event is not only possible, but imminent. Let's take a closer look.
New York on the LBMA. And so it's drying up the liquidity in London, where they would use, a lot of the banks would hedge their positions in London with forward contracts, derivatives, paper. Remember, in London right now, there's 200 and roughly, last week, I don't know, it's probably a little less now, but 279 million ounces of gold in London. Only 36 of that is available for delivery. The rest belongs to ETFs in the Bank of England. And that's standing behind 380 million ounces in outstanding spot contracts, 11 times nearly the number of contracts issued versus the amount of gold issued. And in silver, it's very similar. Roughly 270 million ounces of silver is all that's available of the 800 million. Now it's under 800 million, like 770, 780, because we saw 85 to 90 million ounces. That's what COMEX is on track for, to be delivered for March, of silver come into COMEX, almost all of it coming from the LBMA. And so and when you talk about 290 million ounces and there's available, yet they're trading 2.9 billion ounces of silver, again, a 10 times the number of contracts standing behind the or the metal standing behind those contracts, 10 times the number of contracts. To me, what it really speaks of is the lack of trust in the LBMA system, that no one trusts that they'll be able to deliver anymore. And they're trying to tell us that it's a logistics thing. It's a lack of trucks and a lack of manpower. I think they're realizing that the exchanges are being bled dry. And maybe now what we see is COMEX trying to distance, and a lot of the banks who would hedge their positions would do so with unallocated contracts in London. So, you take these massive short positions and then try to hedge it with unallocated positions in London. That's not a good thing. It's going to, in my mind, start to really emphasize physical markets versus futures markets. And that's something that none of us would thought would have ever happened. Now, I guess we'll find out. But it's not just the United States. I mean, we've seen in India in January and February, 44 million ounces of silver delivered to India, on top of all the silver they've been buying over the last 4 years. So, we're seeing China buy massive amounts of gold as well. And that's been well documented. China has purchased, what have they purchased? Let's see, I think I have that number. Central banks have purchased almost 1,200 tons in 2024 alone. So I don't have the exact numbers that China has purchased, but it's an awful lot. And look, the bottom line is that physical demand, de-dollarization, alternative exchanges, these things are all happening in real time. And all at the expense of the LBMA. And it appears as though, I mean, if you take a step back and you look at it, they throw out the idea of tariffs, which really don't seem what it is to me, and which allowed for all of these exchanges of for physical with fungible COMEX contracts into London, and the metal was flowing. And then I think they're starting to realize that this is deeper. So then they come out and say, well, it's not a T+1 anymore, it's T+8 weeks. This is a big deal. And it's a big deal because the banks that have been suppressing the price forever may just have lost the ability to do so easily anymore, because they're not going to be able to offset these positions in London with massive unallocated positions when you have all these entities standing for delivery. People's Bank of China has added 600 tons of gold in 2024 that we know of, probably a whole lot more, not to mention what they purchased. But this heavily unallocated paper gold to physical ratio market is breaking. And when you realize HSBC, Scotiabank, JP Morgan, they depend on these derivatives and these unallocated this unallocated gold to hedge their positions. They're not going to be able to take these massive naked positions anymore, these positions that have allowed them unabated to manipulate the market. Because as I've surmised for a long time, there are entities starting with the BRICS and now the United States that are getting wise, I think, to just how important physical is in a game that's rigged. When you see Jeffrey Gundlach come out, the bond king, saying, $4,000 gold is easy and in the cards, you're beginning to see a lot of big name people understand exactly what's happening. And, $3,000 gold, if we see these trends continue, will be a distant memory. And I don't really talk that way, but it just seems as though these are the kind of things that could certainly
Imagine this. Gold breaks through the $3,000 mark and silver edges toward $35 per ounce. Yet the mainstream financial media remains silent. According to Schectman, this silence is not just surprising, it's shocking. In his words, if someone had predicted gold would reach these levels with no coverage, it would have sounded impossible. And yet, here we are. While gold has taken center stage, silver remains a sleeping giant. But that may be about to change. For decades, the silver market has been dominated by two giants, the London Bullion Market Association and the COMEX Exchange. Their system? Massive paper contracts, many of them unbacked by physical metal. The result has been a suppression of price and a market detached from reality. Today, those cracks are starting to show. Currently, the LBMA holds just around 270 million ounces of silver available for delivery. But the market is trading nearly 2.9 billion ounces on paper. That's a 10-to-1 ratio, 10 promises for every 1 ounce that actually exists. The same is true in the gold market, where the physical supply is dwarfed by outstanding paper contracts. This imbalance has gone unnoticed for years, but not anymore. Vaults are being drained, delivery times are stretching to 8 weeks, and the global appetite for physical metal is accelerating. Nations like India and China are leading the charge. India imported over 44 million ounces of silver in just the first 2 months of the year. China's central bank has added more than 600 tons of gold so far in 2024. Meanwhile, Russia and other BRICS nations are aggressively reducing their reliance on the US dollar and stockpiling hard assets. Schectman warns that what we're witnessing isn't a short-term trend, it's a structural shift. Physical silver is being pulled from the system at an unprecedented pace. And once it's gone, it's gone. At the same time, industrial demand is skyrocketing. Silver is now a critical component in solar energy, electric vehicles, 5G infrastructure, and medical devices. The solar sector alone consumes nearly 20% of the world's annual silver supply, and that demand is only rising. This isn't just a monetary metal anymore. Silver is the backbone of the green energy revolution, and with mining output flat and new discoveries rare, the supply side of the equation isn't catching up.
$84 an ounce at one point. Silver, certainly it was bigger, but if you look like, for example, right now in China, as an example, when you talk about arbitrage, silver today was at last night was at $35 an ounce in spot in Shanghai. So there is arbitrage around the globe, but not as significant as it was a few weeks ago. because it's becoming too difficult to get it there. So I think that arbitrage, which would necessitate some form of expediency in getting the metal sent this way, when you're talking 8 weeks delay, not really worth the effort. But now that these contracts are being stopped, I think that this is something that is going to start to perhaps put great strain on the physical market, perhaps could put a run on the LBMA and really start to shift price setting and global awareness to other exchanges, in particular Shanghai, Dubai, Moscow. We've talked about this. Now, is this the beginning of that? Well, it sure looks like it could be. But the United States is now prioritizing delivery over paper, which is something wholly, completely different. Almost all the gold that has come over the 25 million ounces or so, almost all of it has already been delivered. So if this delivery continues, you'll see strains on COMEX as well. All I can tell you is that whatever is happening in London, it's the beginning of the possibility of an existential event for some of these banks that are massively short if they get copious amounts of delivery requests, 10 times the amount, 11 times the amount of paper versus gold. That's a situation I certainly wouldn't want to be involved in if I was a board member of one. Everything has come down. The ask price on pre-65 silver is as low as I've ever seen it in reality. And so, during the pandemic, the premium on pre-65 silver was off the charts. It was higher than everything but Silver Eagles. Part of me believes that there will be an awakening by the public. I mean, the fact that we haven't seen it yet is astounding to me. Mm-hmm. The fact that we've gone to such a culture of greed where 30-40% rise in gold is not sexy enough, where at 9.9% per year for 25 years is not sexy enough. The fact that the central banks have been buying it hand over fist is not sexy enough. The fact that we are now a net importer is not sexy enough. And it's not Bitcoin, it's not Nvidia, it's not Apple, it's not risk on. But quietly, the tortoise seems to be pulling out ahead in the race. And yeah, there'll be an awakening at some point, and you'll see premiums on things like junk silver go straight to the moon again, simply because it can't be reproduced. But when you start to see things like we're seeing, where exchanges are being bled dry of their 1,000-ounce bars, and central banks are being told 8-week delivery delay, and 145% of the London float delivered in the last 3 months. These things are getting real, and I've never seen anything even remotely close to this. And it's hard trying to take this information and discern what is really happening. And I don't profess to really know, but simply to take all of the pieces and put them together and say, yeah, this could actually be what they are doing. And I've been talking about this now for a few weeks, and it keeps happening. More and more things are happening that would say, geez, that's supporting that argument quite nicely. So, Dunnigan, yes, I think that silver, certainly, look, we're right at 35, almost there. We're just a little bit below 35 on the futures. You get above 35, there's virtually nothing there to stop it between it and 45, and then the sky's the limit. Now, is that going to happen? Well, every time, when Rick Rule comes on, and I've said it a million times too, we haven't been really right yet, but it was in the past, and that is gold really leads the way, silver languishes, but then on a percentage basis, slingshots. Well, silver has been acting quite nicely the last few days. Could it bust through this resistance level? You see how much silver is being exported out of London and imported into India and the United States and China and now Russia. We talked about China buying all the doré and the concentrate.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Now, let's look at the gold to silver ratio, one of the most overlooked signals in the market. Historically, this ratio hovers between 40-1 and 50-1. Today, it sits around 80-1. Every time we've reached this level, in the past, silver has staged a dramatic catch-up. In 1980, the ratio collapsed and silver rose 900%. In 2011, it happened again, sending silver from under $9 to nearly $50. This time, the forces are even greater. Central banks are hoarding gold. The global financial system is shifting, and silver, historically the runner-up, may now be the main act. So, why is April so important? First, COMEX silver contracts are set to expire. If enough investors demand physical delivery instead of settling in cash, the pressure on already strained inventories could become overwhelming. Second, the Federal Reserve is set to meet. Any hint of a dovish pivot or rate cut could trigger renewed weakness in the dollar, and historically, silver reacts sharply to dollar movements. Third, inflation remains a wild card. If data shows rising or persistent inflation, investors may turn even more aggressively toward tangible stores of value. Finally, geopolitical tensions are rising. As global uncertainty grows, demand for hard assets tends to spike. And silver, serving both industrial and monetary roles, stands to benefit. Schectman believes the paper-silver system is at a breaking point. And once confidence fails, the rush for physical metal could begin in earnest. Paper holders may find themselves with nothing more than empty promises. The manipulation schemes of the past, margin hikes, short-selling pressure, and quiet interventions may no longer be enough to stop the surge. The system has relied on investor complacency. But now, investors are waking up. As silver approaches key resistance levels, $30, $35, and ultimately $50, Schectman argues that momentum buying could take over. Once silver breaks 50, there is little technical resistance left. Triple-digit silver, long dismissed by the mainstream, is no longer out of the question. He points out that past efforts to suppress the price, like in 1980 with the Hunt Brothers, or in 2011 with margin hikes, may no longer be as effective in a market that is more global, more informed, and increasingly physical. If COMEX or LBMA fails to deliver metal when it's requested, it could trigger a crisis of confidence. That's when the repricing begins. For small investors, the warning is clear. Holding paper silver could be the riskiest strategy of all. ETFs like SLV, often controlled by the same institutions that have suppressed the market, may not be able to provide physical metal when it counts. Schectman urges investors to consider physical ownership, bars, coins, and especially junk silver, which he says is dramatically undervalued and offers unmatched flexibility in a crisis. He also notes that delivery delays and vanishing inventory at the wholesale level could soon affect retail supply. The window to secure physical metal may be closing. At the Economy Express, we'll continue to monitor this developing story as we approach April, a month that could redefine the future of silver. This isn't just about price predictions. It's about market mechanics, supply constraints, and a shift in global financial behavior. Gold has already made its move. Silver may be next, and when it moves, it tends to move fast. Will silver finally break free from decades of suppression? Will we see a revaluation that shocks the world? The pieces are in place. The question is, are you ready? Stay informed, stay prepared, and subscribe to the Economy Express for the latest updates on precious metals, market movements, and the future of finance.